This is just AMZN on Wednesday, April 3rd, 2019. Taking a look at what we did today. This is the gap up. This is the pullback. This is the bounce. And then we actually rolled over. Bounced again and again and again. Kind of a crazy day how we moved around in here. We ended up having a bearish candle a day, bullish retest gap. I've got this broader view looking this on the daily, just kind of thinking back through what we've done in this price range. First time we came into this price range, obviously we're going up into it, sold off through here, sold off through here, sold off through here, and then it doesn't, it makes sense. We got some selling again here. So obviously I'm skipping over the buy. Like obviously in order to sell off through it multiple times, you had to buy back up through it. I'm seeing a lot of bearish candles right around the price that we got at 18.15. So it seems like there's more bearish candles than bullish candles, just kind of, squinting your eyes. Obviously there has to be buying candles through that price. Anyway, just an observation that there could be a little more selling ahead soon. With what I drew in yesterday, I would not be surprised if we continue to run up like to 1841.30. It'd be great to get up there. But I feel like this candle today was a bit of a warning shot. And so let's kind of walk through what happened today. First of all, from this view, you can see we pulled back and didn't touch 1815 3 separate times, which I thought was very, very interesting. And then this fourth time we actually bounced right, or pulled back right on through it and actually put in a tweezer-ish bottom, 3 cents tweezer-ish candle. And up here we had a tweezer-ish candle that was 4 cents off the highs. So, let's just zoom in on the day. So you get the setup of where we're at. You got this consolidation here. We open up. It's a bullish retest. It throws this lower wick here. Some bulls bought that back up, thinking, oh, it's going. I don't want to miss this. That was on the new people, trying to get in this, not wanting to miss something, and they probably got stopped out. As this is pulling back down, I'm looking for it to pull into 1815. Even though yesterday's price range of like 1817 worked really, really well, I was more confident in the 1815 price for it to have a bounce. And it didn't get there. It had a great hammer candle, and you could have been buying, above this candle. Like this was the trade, getting in above this candle and a stop below it or stop below 1815. Looking at the options, this is the 1825 calls. To do that trade with this option would have been like 1075 by 8. A little too wide for $100 risk. Even getting a bracket around this candle would have been about $1. I mean, the range in this is $1.10. Could have been done, with a little bit of, leeway there. But anyway, you could have set something up here and rest a little bit more. I didn't want to do that. I went out to 1830 call. But again, looking at this, had you just had a trade set up, waiting for something, we got into the $9 range yesterday, 9 by 8. That worked again. 10 by 9 in this case would not have, even though that worked most of the day yesterday. I think, was it the previous days? Yeah. So 9 by 8 had been working from, or had been a setup that it would have triggered you in, whether we say working or not. I mean, it would have gotten you in or almost in here, maybe here, maybe here, definitely there. I mean, you're buying at the pullback, at the low, on Monday, on Tuesday, and then again today on Wednesday, 9 by 8. Even over here, 9 by 8 could have worked or could have triggered you in and then didn't quite get to 2R for 11. It's just how it moved here. And then Had you still been in, you would have been stopped out at 8 down here for a full hour loss. Totally possible, totally feasible. And had you just traded down by 8 on the 1825 call, that's how things played out. So what I did is I was looking for this to slow down a little bit, to rest. Let's go back to this. Okay. So this really, we ran up. We're 15 minutes into this bounce. I'm liking that we're getting back above this. Is it a shave top? Yeah, the shave top candle. Then this candle comes in as the 20th or 20th. As after 20 minutes from a bounce, I'm like, okay, yeah, we're obviously up here. It's a fake wick. I don't really know what actually happened in here. It was on all the smaller time frames. We'll see if the data gets corrected. I think this one is real. I'm pretty sure this one is not. But then this candle came in. It's like, oh, are we gonna roll down? Are we gonna give ourselves a second opportunity to get a bounce off of here, down here, And that very quickly got bought up. We're going sideways. I was like, okay, get in. This is the rest. After this kind of bounce, this was the rest. And so in here, you could have been getting in up here, like 13, no, like 1275. 1275 by 1175, something like that. I was just looking for some round numbers. I was looking for something that was a little cleaner. And if you look at the 1813, let's look at yesterday and today, because I don't normally, usually like to focus on, on the 25s. I was just looking for a certain price. This was working 8 by 7 in this case. So we're $5 further out of the money, and only $1 off from where the price was. I don't know if I use the word working again, because this one wouldn't have worked. But anyway, the bounce on this one, 8 by 7 was the bounce that you could have bought, just like you could have bought that anywhere in the day here. And then as this ran up, I like that we're into the $10 price. So that candle that pulled back, that got bought back up, but stayed a bearish candle. That was right what I wanted to get into. It was 10 by 9. I love the setup 10 by 9. I'm always looking for that as a little more confidence of something to get into. Liked how the low that this came back down to was right, really right along the highs of yesterday here, and held that after basically holding the lows here from yesterday. So I got in somewhere here, 10 by 9, and then that moved pretty quickly up to 12, and I just had a 2-hour target. So getting in 10 by 9 with a target at 12, I was out pretty quick. When it was bouncing around up here, I'm like, oh, maybe it's going to run to 13. Could have gotten 3R, and then it doesn't, and it didn't get back up there. I'm like, oh, that was a really good setup. Like I had already missed the bigger bounce, So rather than trying to get 3, 4, 5R out of a move, I missed getting in way down here. And because it didn't pull back into 1815 that I was looking for. So had I gotten in down here 8 by 7, yeah, I would have been looking probably still for 12, to get 4R out of that. And, because 2R, it was there super quick. So anyway, that was the move. That was the move I missed, the whole thing, but the move I got into was this one, which was really cool. So getting 2R out of that. So that was, in and out of that in about 30 minutes. And then we really just went sideways. We just hovered here, right at the pre-market resistance. We held that right at this 1830 price, which I was really happy to see a nice round number. That helps too. But if you look at, obviously knowing where we're at the end of the day, this is one of those days that there were some signals of this thing kind of rolling over. So let's go through those. The first one I'm seeing is that we made a slightly higher high from this one, but a inverted hammer that did end up actually breaking down, like turning into an evening star reversal. We had a close below the 21. So kind of first signal, second signal, sideways here. looking like we're going to consolidate. We break above the highs on not great volume, put in a tweezer-ish top. I mean, for Amazon, you can call that a tweezer top. And then we don't get back up, above this. So now we're making lower highs. So 1 signal, 2 signal, 3 signal, and then we're going sideways here. We got a stair step here that breaks down. You got this candle and this candle as kind of brackets. Let me draw this with box and white box. So these are kind of your bookends of bearishness with some bullish candles in between. Obviously, this one that came way down here, huge volume, probably huge volume on the sell down, and then on the buy back up. Obviously, it turned into a bullish candle. For this to happen, this sort of candle where we're at, I mean, to me, this seemed like anybody who had an order in down here, like mine was, getting in here, looking for that pullback a little further than here to get in, seeing that they were getting in and then not have the continuation that with these candles, this was the high again. We didn't even get back up here. Didn't even get back up here. It's like, ooh, this could do some more rolling over. The potential's there. And then a very small candle, basically sitting at the same support here from where these lows were. I'm sorry, the lows and then the low of the open of the body here. That getting taken out in this candle. Again, with a little bit higher volume than what we've had, not excluding that candle, but this one also breaking through the uptrend line. There's opportunities for this to pull back some more. Again, I was looking for it to pull back into 1815, and it did not. And so when it bounced here without getting up there, it's like, oh, I missed another bounce. That was, again, looking for that. So when this one happened, it's like, okay, let's get into something here because it's not pulling back to 1815. 1815 was a great line. It's just not the one to watch today. So I was getting into something here. The position was up a little bit and then rolled back down, and I got stopped out for an R when it came down here just to see it bounce again. And so the setup I had on this one, which one did I do? I used a different option because I don't like using the same option for wash sale rules. And so I think I want to say I did 1835. I should know this. Should obviously know this. No, not that one. Oh, at this point, did I use 1825? I think I used 1825. Yeah, so I did with this bounce. I wanted a stop right below that low because it was holding around 850. So I got in 950 by 850. It moved up a little bit to 10. Not enough that I felt comfortable moving a stop. And then this came in, and then I got stopped out here. It pulled back a little more, down to 8, and then bounced right back up to 10. So it was just like, okay, 3 times it worked to buy, 9 by 8 or 950 by 850. That one 849. So maybe that one, if you had it set up after the bounce or after the pullback. But anyway, the 4th time is I got hit with one of those stop outs. That happens. This one pulled back a little bit more. It pulled back finally to the 1815. So had I been a little more patient from this one to here, buying at 1815, I should have been getting in here, getting in 8 by 7 and holding that for 2R. And then instead of being only up an R today on the 2 trades, I would have been up 4R today on the 2 trades, which would have been better, but I was still up on the day. So those are the trades I took. The options I did were the 1825 call and the 1830 call. And I will probably, if things are going to move up some more, I'll probably continue to avoid those on Thursday and Friday, just in case that there's any sort of wash sale issues. So, I mean, because I was up on the 1830 call, I could have traded that one again. That, it's only a wash sale if you have two losses. I mean, obviously consult tax professional, but this is what I understand from how the laws are written. Anyway, it's just something that I always consider when I'm trading options, because there's literally so many options, that just moving by $5, moving by $2.50 to the next strike, as long as the volume's there, it's okay to trade it as long as the volume's there and your setup's there. Even the 1825, I'm sorry, the 1827.50, there's enough volume here that the levels are pretty clear. Not on this way up, you can see there's not as much volume, but I mean, you've got enough volume throughout the day that if you're doing a couple of options, it's doable. Now, if you're doing 10s, 20s, 30s, 40s of contracts at once, probably stick to the higher volume ones where you have, your 10, 20, 30, 40 could be absorbed into, some of these higher volumes in here. Even through here, you can see there's just some smaller volumes, as this is going sideways, but obviously we're looking at our levels. So we're trying to get in here, so you'd be half the volume at 40 contracts here, so just know your R, get some practice with this. If you're trading that many contracts, good for you. Hope all that's working. And hopefully these videos are helping also. But you may need to even be like in the money on something and use less contracts and a wider stop than the $100 one I'm always talking about. Maybe you've got a $500 stop, $500 risk, or no, I said it right, $500 stop. So you have less contracts, but you're in the money. And so you're still looking for, a move that's, like this one would be like 26 by 21 or something like that, and it goes from 26 up to 32. I mean, it's not even 2R, but you get the idea. Is the amount of return you get with more further in the money, you're not going to get as good a return as the little more speculative out of the money strikes. But that's why the $100 risk works that well when you're out of the money, because you can multiply those gains rather quickly without as much of a move in the stock or in the option then too. So anyway, that is, basically what I've been studying, figuring out, and connecting for myself, and sharing with anybody who's enjoying the videos as well. And doing that every day for quite a while now. So, if we zoom out here, you can see as the 5-minute moved, this is the 1800 call. You can see the same pullback, bounce, some of the similar candles, like this 1800 call, and it's moving very much with the moves of the underlying stock. And so it's where you get to something further out of the money that you see a little more disconnect from that. So if we look at this, we get the pullback, we get a bounce, and it looks like we're getting a huge bounce, come right back up to the high here, which let's see, there we go. We did make a new high here, so that kind of follows. But then we didn't get back up to that price, even though we made a new high here. So when you're out of the money, the best time to take your gains are when you're moving in the direction. Because if you wait a little bit for something to go sideways, you have eaten up a lot of theta decay just for that time going by where it's not doing anything. And the whole goal, always the goal of out of the money options is to get to zero by expiration. And so um, there's no intrinsic value. There's nothing to hold the price. The only thing that really helps the price move is when it's going your direction. And so that's why this kind of move is so great to get in at a low, watching the candles, knowing what candles are the bounce candles, knowing the levels, because you could have been getting in. Like if I was watching the 1850 call, I could have been getting in at 3 by 2, or 3 by 250 and getting two of them, for $100 risk, or multiply out however many times your R is to get your risk. And that would have, from 3 up to 5, that's still 2R, that would have been a great move. You would not have gotten 2R if you had done it, if you had used the 1850 call, getting in at like 425 up to 5, like I was able to do with the 1830 call, with just one contract like that. It just doesn't have the range to move like that. Even with 425 up to 5, that's only an hour and a half, and with 2 contracts. So anyway, it's you gotta know the stock, you gotta know the option, you gotta know where the option's at. And one of the easiest ways to really kind of keep track of what strike to go with, and it worked today, like it literally worked today, is if you consider the price that you think your move could get into, that should be your strike. And so, or something near it, so in this case, the strike I picked for my trade was the 1830 strike. And we actually touched 1830. I wasn't still in it, but the potential to get there. And if you get to that strike, you see a shift in how how the out of the money option moves once it gets in the money. You've got usually a lot quicker gain to get up to at the money, and it starts to slow down once you get in the money. But the potential is still there that it could rip higher. In this case, calls, the stock can go higher, the option can go higher. But it's usually going to do something around that strike if it's a good place for the stock to get at the money. And that's what happened today. You could have done that with the 1825, 1827.50, the 1830, probably in the 1832.50 would have been similar. I didn't look at this one to see. So a whole lot less volume. So I probably would not have traded this one. Price ranges are pretty good. To pull down to 7, you could have done like 8 by 7, something like that here. And it would have worked, just the volume. You got 1 or 2 contracts at a time. You got, look at the volumes, 8, 5, 5, 3, 3, 3, 9, 9 down here, 3, the volume, me doing 1 or somebody doing 10 is going to flood this, and the market maker is going to see that come in. Your spread on your buying and selling, your bid and your ask price could be that much larger with that many more contracts. So, or not that much. You just basically hand more money to market makers with more contracts because of that spread, with less confidence that we're going to get into the money and you earn that back for something that's already trading on such low volume. And so this would have been a bad example of what to trade with. But like I said, the 1827.50, this one, I think, we at least are in double digits. Look at this, 52, 9, 1. I said double digits, so there's one that has 9. So forgive me. There's 52, 9, 150, 14, 10, 18. At least we're in double. Okay, 9 there. This slows down a little bit in here, but you've got some volume here that 1, 2, 5 contracts. It's not gonna be as noticeable on the 1827.50. So just look at that, kind of study that, look at how that's moving, and you'll see these connections to which one to go and grab, how to do this with really mitigating your risk, absorbing some of that risk into the spread, because that's something that you would basically have a potential stop out. I had some slippage on a trade last week with $100 risk, and the slippage was like another, I don't think it was half an R. What was it? I think it was down 1.2, 1.3 R because of slippage from what the price was being filled because of that bid-ask spread and the volume. So, it's possible. It happens. The trade today made exactly 2R. On the one, got it stopped out for exactly 1R. No slippage on those. So that also gives me that confidence. It's like, okay, I can stick with these strikes. These are good strikes, when we're moving around in this kind of range. So anyway, I think I didn't talk about what option for the puts, or did I? I did want to. I don't think I did yet. So the 1825 put was really interesting looking back at this. This whole time, we're sitting just out of the money on the puts. We're getting these little bounces off of 1825. Look at the puts. They're staying range bound between 10 and 12, except for a couple blips here. I mean, you could have been setting that up on this tweezer top, or the candles shortly after it, 10 by 9. Again, my favorite setup, 10 by 9. If it had filled, and there's no guarantee it would have, it's possible it would have filled right here after the tweezer, kind of anticipating that, okay, here's some of those signals. Otherwise, you're waiting for it to break down here on this candle. And that's where it's breaking out here, which at this point, you still could have done like, 12 by 11, or go a little further on the money. Like maybe look at the 1815 strike, because 1815 is the price level we wanted this to pull back to. And so if we look at the 1815, we were putting in some lows around 6. We're getting this price here. Okay, we're already up at 8. That one actually would have been a little bit tougher. 8 by 7, that would not have been as good. Didn't expect it to be like that. That would have been a little bit harder. Maybe going out to 1800, but that's one that I wouldn't expect it to get that far. So if I don't expect to get that far, I may have to be more conservative on my target. Still trade it that way, but be more conservative on the target. And so in this case, this breakdown, if you waited to then to get in, you're getting in here like 4 by 3. 4 by 3 would have worked. And then your target is 2R, but that's all you're going to get. And some of the other ones, if we go back to the 1825, 10 by 9 would have worked really, really well. But you would have had to be buying speculatively up here and holding that down to this, down to another bounce like the earlier one without hitting 1815, probably getting out at like 16. So that would have been, 10 up to 16 is 6R. So that's a 6R trade to get in speculatively up here. Instead of the 1800 put, you would have been getting in 4 by 3 and holding it to 6 through that whole move, as this breaks down for 25 minutes here, so you're riding that whole move. It's just a matter of where your risk is at, where your trading is at. If you're more aggressive, more conservative, you're waiting for that move to be triggered. If you're waiting for the signals to play out in your favor, or if you're okay with, going and getting into something, trusting that the candles are telling you, giving you some of those warning signs that, hey, this looks like it's going to roll over. I'm getting in a little bit early to do it, and sometimes early is wrong, but it could roll over, and in this case, it should have, getting in 10 by 9 would have totally worked up in here. It's just a matter of would have been filled, or you could have done, as it's doing this. So you got all these signals, you want to bounce, okay, get on this candle, because it's like we're not bouncing. We need to get above and stay above. We're not doing that. But if we get above, I'm stopped out for an R. If we break down, there's a lot of people trapped. You do that assessment. It's like it's a better risk tolerance to actually get in on the rollover than it is to get in on the bounce. or you could have both trades set up, I guess. So, but anyway, if you're getting in on this candle, you're getting in possibly 11 by 10, which is a little bit higher than my favorite, 10 by 9, but you can do it. That's fine. But 11 by 10 possibly could have filled. And then you're in this, again, up to 16. That's 5R, And then each of these pullbacks would be a little bit tougher because it pulled back to the high here. As it's making these small candles. That's a really nice small candle, though. And the option was a range of 0.6. So that's one you could have done like 13 by 12, 1350 by 1250, and that would have worked nice for another 2R or something, just to roll over like that. 20 minutes of buying, right into the 21, rollover makes sense, So, rollover here made sense, rollover here made sense, rollover here made sense. All these just running up into the 21 after 20 minutes of bullish candles. We got 25 minutes of selling, 25 minutes of selling, 15 minutes of selling. So 25, 20, 25, 20, 15. I said that wrong. 25 selling, 20 bought. 20 selling, 20 bought. 15 selling, 15 bought. That's interesting. So we had some directional things going for certain time frames that actually turned into a decent pattern. So anyway, I'm going off on too many tangents. So we zoom back in here and look at where we're at. We're way up here. This was a bullish retest. It made a new high of recent times. The last time we were at this level was here. October. October was the last time we were at 1830. 1830, 15? What? Okay. On October 18th, we sold off from 1830, 15, just 15 cents away. So we didn't get as big of a sell-off as October 18th, but we got a similar candle to this today, a little lower wick. I guess I'm kind of anticipating some more pullback because we've done that a lot of times. Even just last week, the week before last, 22nd, we sold off from this level. We haven't touched the 5 in a few days. If we go up a little higher, just be aggressive with your entry and your exit to get that 2R, or maybe a little bit more. But there is the potential we gap up above this, and then we make a huge bullish candle and we just run. The potential is there to look something like this. It looks something like this, where we're right in here with the highs. We gap up and we run and we run and we make some more candles like that. Totally possible we could do that. Could we do it again so soon? We just did it here and we haven't run. Could we do it here and run? I don't know. Or could we gap up and fade and make a candle similar to this one, where we either gap up and fade, or we have a slight inside gap and then pull back. I think this kind of candle is more likely with where we're at right now here, and pull back into the 21. That's a move. Oh, that's a move into 1752. I would want it to pull into 1747. Pull all the way down. Where's 1747? What happened to 1747? Is that it? In the world. What happened here? What line is that? Something happened to my lines. I thought I had. That's not right. Okay, somehow. Sorry, let me move it. I think that line was 1747, and somehow that moved down. Come on. That's really weird. 1747 has been on here like forever. I can't even, wait, I think I can zoom this way. No, so let me zoom. Something is not cooperating. Okay, I'm gonna have to fix that because 1747 is not on here, and that's definitely a price that I would want as a target. There, that something's weird. I'm sorry. Not sure what happened with that, but I know 1747 because we were pulling back into it on these candles. I was just talking about it last week. So either somehow it got deleted, and I don't remember when it was drawn, um, or moved, and I don't remember this. I don't remember this candle or this. I'm sorry, I don't remember this price in here because that just seems it seems too. Let me see if I can get into it here. It's still not letting me do anything. Something happened with this. This is like moved. So I'm gonna put this back at 1747. If I can get it on the nose, that'd be great. 1746, 1747. Okay. I don't remember when it was drawn, but that needs to be at 1747. Okay. That looks a little better. That was the bounce we had last week. I could see this pulling back into the 21 in 1747, or I could see it pulling back and getting back there like X marks the spot over here, like we did over here, where we had a similar candle to today. We gapped up, sold back down, we pulled back, and we had these interactions here with the 21, this downtrend, these lines. It's just a matter of, oops. It's just a matter of which line when there were so many in here. And it was really just the top one, which 1747 is the top one here. So I could see that very much being a potential to pull back through this, get into this channel again. Similar to how we had a lower wick into this. I could see that happening tomorrow or into Friday and getting a lower wick down to 1747, or if the 21's still moving up, maybe 1760. Any that's possible over the next few days, or the next week. The 12th is next Friday. If it's slower, it'll probably take to here. It'll be through the 21, and it'll look a little bit more like this one. That's possible too, but I don't know if it's going to go that slow. It would. Anytime we've sold off through here, what have we done? We have a slower sell off here. These have been quick sell-offs. I kind of think we'd have a quick sell-off, and we're not going to sell. I mean, we could sell off again if we. Sorry. If we sell off into the 21 in this week, get bought back up some, stay below or around 1815, and pull back down again into this X marks the spot. That could totally happen. So guess we'll wait and see. I still like a consolidation between 1747 and 1815. We just got out a little bit, and it looks like we're going to pull back in. That's what this is telling me right now. It's like this could just be a really nice distribution, really nice rest. And once we put this in for a week, 2 weeks, couple weeks, we could see this thing continue really nicely. But it would be a really nice rest at, I'm gonna say like a really nice rest on top of this wonky channel, on top of the inverted head and shoulder ish. I mean, I haven't talked about this in a while, but here is double shoulder, head, and then like a flat shoulder or a much shallower shoulder. When I've seen this, I usually see a bigger move. And in this case, we're just getting going if we can do this for a while and then do something like that. And so that would be pointing to summertime to be up at new high. I mean, we need some consolidation here, and then obviously needs to break out. But again, we'll see. I'm usually looking at the 5 minute, and here I am speculating out to the summertime. So we'll see what happens. I will see if I can get this line corrected, because right now it's not letting me type something. 1740, yeah, it's not letting me type it. But hope you enjoyed this video, and we'll be back tomorrow for another one. This is Just AMZN. Thanks.